you're still going to look for these exciting new things, but you're going to do it on your own time frame. You're going to hold them as long as you have to hold them to realize whatever you'd like to realize, and not beholden to anybody else who's pushing you to do that.
In fact, and the learning on this was one that has frankly cost me billions of dollars personally. There was opportunities for us to invest in Uber all the way into the Series, B, I remember, when Menlo called and Benchmark and, on a Sunday night just put in $10 million, and which would have turned out to be a multi-billion-dollar piece. And I said no, because I didn't understand how an investment like that could sit inside of a very traditional venture portfolio. That was my mistake. I've made similar mistakes like that in the past. One of our biggest investments is a company called Slack. And I still think to myself, why did we not just lead every single round and write the entirety of the fund into that company? It was obvious from day one that Stuart Butterfield is an iconic CEO, and that Slack is going to be one of the most important tech companies in the world. The reason I didn't do it, Scott, was because I was running a fund, and I had employees, and I needed to generate fees, and these funds had LPs. All these mechanics and guardrails that were not necessarily coupled with making the most amount of money. It was coupled with the business model of being in the investment life cycle. And having the freedom now to step away from it, I took it. And I think it's an incredibly exciting time for me personally, although it can be very jarring and upsetting for those investors who now have to go and find other places, probably not as good, to allocate their money.
You brought up Slack, so let's go there. You own 10% of the company. You're on the board. I know you're limited about what you can say as a result of all of that, but when can we expect it, and why the direct listing, and do you agree with that decision?
I love it. I mean, I think that the decision-making that Stuart has taken is incredible, both in the way that he's built the company, he's transforming the culture, he understands the product to a level of sophistication that I have not seen since Facebook. When I was in the bowels of Facebook building that machinery, what I saw was a team that really understood product market fit and the power of network effects, and why that created an incredibly subsidized business. A thing that could expand all over the world at marginally zero cost. The only company in the world that looks like that today, that is not yet public, is called Slack, and it will be soon. And so from that perspective, I think it is the most incredible business that we have seen. Probably the next closest thing to it is a company that just went public recently, which is Zoom.
So we obviously talk a lot about these hot new IPOs coming to market, valuations. Some suggest some are getting a little over their skis, the way that these numbers have been pushed up. Do you agree with that? You look at all of these that have come out recently.
So look, another big reason why I took a step back from the traditional investing game is that that game is in part rigged, but it's also in part fundamentally broken. Why? Because as you raise more and more funds with the goal of just generating fees, you need to allocate those into companies that are seemingly reasonable, where you won't lose your job. What that's resulted over the last 5 years is an enormous glut of money that has gone into enterprise software businesses. Why? Because there isn't this binary product market fit risk bet. There's some revenue. You're selling a product to a customer who's willing to pay for it. But the dirty underbelly of all enterprise businesses is that you spend an enormous amount of money on sales and marketing. So much so that right now, most of those companies have no line of sight to being profitable, and some of those companies are actually gross margin negative. And they're all raising capital from venture capitalists on the back of this idea of growth, 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 growth. Now, I look at that and I say to myself, all of these venture investors are telling me that because they like enterprise, I actually should take a step back. When they are greedy, I am fearful. I particularly don't like the enterprise space, X of Slack and probably Zoom. And there's maybe a handful of others around the edges. But beyond that, I would not put a single dollar in enterprise. It is overbuilt, it's overinvested, they're highly, highly unprofitable, and the real winner is Facebook, Google, Amazon, and Microsoft. So from my perspective, the actual companies of value right now are consumer. Look at the multiples of Facebook for the amount of cash they generate. Look at the multiples of Google. Look at Amazon themselves. Those are incredible businesses that you can own, which are much, much better bets.
Well, you're describing sort of obviously well-established and thriving businesses. I'm somewhat surprised to hear you say that the enterprise side is the one that's overvalued, whereas the consumer side looks reasonably valued, when a lot of the consumer companies are not profitable and have no roadmap really to profitability.
I think the conventional wisdom there is a little misset. Again, I think that right now investors have a tendency to be late to the party. And when the music is on, as my friend Bill Gurley says, they love to dance. And right now, the enterprise world is the one where investors can look smart enough to their LPs to raise subsequent funds, which is really a backdoor mechanism to just generate more fees and pay themselves a salary. And so enterprise as a class is very challenged. There are a few, like Slack, which are exemplary, but most we will find are incredibly overbuilt, overstaffed, very difficult to get to long-term sustainable profitability without being acquired by the big stalwart enterprise companies.
I mean, there's a Snowflake is one that's hanging out there. We discussed it with our multitude of guests yesterday. That's in the enterprise